Joining us now, John Belton, Portfolio Manager for Growth Equities at Gabelli Funds. Okay, where do you see it? What were numbers there? 7,100, 7,500, 8,000. Pick a number.
I'm not going to pick a number. That's too risky. I'm not going to do that in a public forum. But I do think this issue.
Well, you can give me any number. Just don't give me the date.
Let's go 7% higher from here, the long-term average.
Okay, great. Yeah, that's bold.
So, I mean, I do think this issue this morning, it's showing how important data center infrastructure is to the economy.
Yeah.
I'm originally from Chicago. I worked down at the Merc for a summer. So things have obviously gotten a lot more electronic from when I was down there. But, yeah, I think a lot of the market's performance will come down to these big tech companies, and there's a lot of debate about them right now. So
they were just debating in the prior hour this AI or the Fed. I'm not sure it's a binary choice here. I think it was a little bit of both, right? And I think the Fed came along and maybe calmed down the AI concern. Is that how you read what happened last week?
Yeah, I mean, I think the Fed definitely calmed down the interest rates concern.
Yeah.
I think, if we take a step back and we rewind just 6 weeks ago, which now feels like an eternity ago, I think the backdrop was the market was getting excited about this idea of rate cuts against an economic backdrop of growth reacceleration next year. Then there was a bunch of drama that you talked a lot about with Fed officials, where maybe this dovish rate path was not so dovish, and then simultaneously some of the data released started to cool down a little bit. So this rate cut into growth reacceleration sort of reversed a bit. Market became a little bit more risk off, probably some fatigue as well after a big run. I think that is what really impacted the AI stocks more than any fundamentals. So I think the two are inextricably linked at this point. But
what do you think is going to be the driver of that reacceleration, if in fact we do see that next year? Is it just more of the same from AI infrastructure investment, and is that going to mark a reacceleration?
Well, I mean, I think you were talking about with your last guest, tax refunds is going to help consumer spending. I think other provisions of the big, beautiful bill, like expensing of CapEx, I think should help spur.
But outside of AI, we haven't seen a noticeable impact of full expensing and immediate bonus depreciation. We just haven't seen it. What makes you think we could see that next year, even though the benefits were supposed to be this year?
Well, I think it's companies have had more time to implement plans with the new policies. So I think that could cause a reacceleration in sort of the non-AI CapEx.
Robert, that's an important point because my sources at Treasury think that companies don't know about it. They think they're just not hip to the new.
Who doesn't know about it? I mean,
that's their feeling. That's their feeling.
This was the biggest lobbying push by corporate Americas to get bonus depreciation into that tax bill, and they got it.
Well, call the Treasury people. That's what they're telling me. And
I mean, if they don't know about it, that's
well. I mean, I'm not sure
concerning.
everybody knows that it's happening. And I want to go back and clarify what we talked about in the prior segment.
Yeah.
I used $2,000 for the thing that the check that Trump.
Oh, the tariff check.
What you meant is that there's an increase of as much as $2,000 in the refund,
right,
which is a big deal, perhaps. Let me come back to this non-AI trade. There was a lot of talk the last couple of years about, hey, get into the equal weight S&P because those companies are finally going to have their day in the sun, but it's still been shining mostly on the 7. Is this a year, you think, 26, when finally investors realize value?
You keep trying to get me to make a big 2026 prediction. But no, I mean, I think we've been seeing the broadening out trade over the last few weeks or the last month. I think that can continue. But ultimately, fundamentals are going to drive stocks. Earnings growth is going to drive stocks. We really have not seen strong fundamentals outside of the big tech companies. So I think the big tech companies, actually, I think five of the Mag 7 have seen their forward price earnings multiples derate this year. So yes, they're still driving a lot of performance, but the performance is coming from earnings growth, not multiple expansion.
Yeah, I was going to